All right, traders, welcome to the part three. I am Devang Mehra from the Financial Analyst. This is the Bold Project, Support and Resistance part three. It's going to be a long series because this is the main price action that you have to know in the markets. I am trying to elaborate as much as possible, but if you still have doubts, we are there for you over the live sessions over the weekend, so we can help you out. But I'm trying to be as slow as possible. I'm trying to incorporate as many examples as I can so that the concept is clear in your head. Now we've done what is support resistance. We need at least 2 points to be tested for a level to be support. We want 2 points to be tested for a level to be a resistance. And then when that level is established, buy at support and sell at resistance. That concept is clear. That's the basic strategy when it comes to the financial markets. Now, the question is, why do these levels work? As simple as that. Why do these levels work? Let's go to the chart of Nifty. I want to show you different charts so you get tons of examples and at the same time you get an understanding of the same concept. Look at the chart of Nifty. I want to show you the data from 2019. Okay. Look at this data over here, 2019. Can you establish support resistance? Take a look at it. For me, I would say the levels I am interested at are like this. This was my support and this level is my resistance. You should be able to clearly see it by now. If you have not been able to see it, look at the videos again and then try the concept. Now this is something very easy. You buy at support, sell at resistance. You get a good like a hammer candlestick here, a hammer candlestick here, a doji here, signaling you to go buy, and you get something like a hanging man here, a hanging man here, so signaling you to go sell. That is fine. Now the question is, why do these things work? Because of one simple rule in the market, which is your history repeats itself. As simple as that. Technical analysis is based on this assumption that whatever has happened in the past, history will repeat. So to get that concept in line with you, if let's say on 3rd of December, you can see that 10,960 level was a resistance, correct? Again, then we saw 18th of December, 10,960 was resistance. Think about it. You are a person in the market. If Nifty, if it is the main market in India, the main index in India, if Nifty always comes to 10,960 and falls down, it comes to 10,960 and falls down, don't you think whenever it will come in the future, your mind will tell you to sell there? Think about it. That's the human psychology. We as normal individuals, as humans, we have this rationale in our mind that whenever that level is repeated again, we will act as if whatever has happened in the past. I'll rephrase so that things become simple. If something has happened in the past, we remember. If 10,960 was resistance in the past, if 10,960 level was not being able to to be able to broken in the past, in the future also we will be selling there, and that level holds. I hope things make sense. Same is the case with this level. 24th December, 10,600 was the support. On 4th of January, 10,600 was support. On 28th January, 10,600 is support. So whenever you come to this level, it becomes support. So think about it. If in the future, after 1 month, again that level comes, don't you think you as a trader will remember it? You will always remember that in the last 2-3 months, that level was quite significant. Whenever Nifty came where it bounced back, so you will think that if it comes there again, I will again buy. It's human psychology. When that level is repeated again, you again want to buy, because if it happened in the past, you assume it will happen in the future. Whether it happens or not, that's not up to you. But everyone thinks from this psychology with this rationale in their mind. So why do these things work? It's very simple. Because things are doing well in the past, we want to relate to that and we want to act accordingly. If selling comes at a particular level, if in the future we come to that level, we want to sell because it happened in the past. If buying is coming at a particular level, if in the future we come to that level and we want to go long, why? Because buying came to that level in the past. Makes sense? I hope the concept is clear why these things work. Coming to the second concept now. Let's understand, a lot of traders do a very big mistake when they are drawing these levels Rather than drawing this rectangle, what I've started to teach you, what people do is they draw a horizontal line. They draw something like this. Is this right or wrong? There is no right or wrong in the markets. Everything is subjective. But I want to tell you that this approach can confuse you, can be detrimental to your profits. How is that, sir? Why did we draw that rectangular zone? Why did we not draw a line? Because when I was telling you it's a horizontal floor, why can't I just draw a line to mark that floor or ceiling? That's the next question. Understand this, guys. Theoretically, market is very easy. But when you come practically into the market, there are some psychological aspects that you have to understand. And in this concept, in this theory, I'm going to teach you that psychological concept. And that concept involves our two emotions, fear and greed. I'll draw an example. I'll just draw an example out for you. Let us say that this level is our support, correct? Let's say this is a level 100 rupees of my own company ABC. This level is my support. It is tested in the past 2-3 times. Now, what will your psychology say? And currently we are trading over here. And this level is my resistance at 120. I've done simple charting. 100 is support, tested multiple times. 120 is resistance, tested multiple times. Now, from 120, when the stock starts falling, obviously you will be alert. Why? Because you know ABC is a good company and you want to buy ABC. Now you know very well that I will not buy ABC in the middle. You will buy ABC only at 100. You also know that concept. Why? 100 is support. But there will be an emotional aspect coming into the market, and that concept is called greed. What is greed? Greed means you are getting, in Hindi we say lalach. You are getting greedy. You want to make money no matter what, correct? So what will happen is you will talk to yourself and say, what if the stock of this company ABC doesn't come to 100? What if the stock of ABC bounces back from 105? That's a possibility, guys. It is market. Some news comes in, market can bounce from wherever it wants. So rather than 100, what if the stock bounces from 105? That is a possibility. So because of your greed, you don't want to miss the opportunity. Currently, let's say the stock is at 107 rupees. So what you will do is, rather than waiting for 100, you will buy somewhere here only. You will buy somewhere above that level, and it is not you. It is everyone in the market that does that because of that greed emotion. Everyone thinks, what if the market doesn't come there? I don't want to miss that opportunity. We have something called the fear of missing out. I'll again explain that example with a very simple plotting. This is my level. It is possible you exactly touch and go. That is possible. Theoretically sounds amazing, but it is also possible that your stock rises from a little bit higher than the support. This is also possible. Why? Because of greed. People don't want to miss good opportunities. So they want to get into the market early. They are happy to accept a little bigger loss, but they do not want to miss that opportunity. Because of that greed, everyone starts buying much before you come to the support. So both of these things are possible. That is the reason I tell you, do not draw a horizontal line, but draw a horizontal zone. Give some room to the market. Market is about not theory, it's about practical experience, and you have to give some room. So for example, if I'm trading in Nifty, so I will like to give a 40-50 point room to Nifty rather than one exact level of saying 11,000. If I tell you buy Nifty at 11,000, it is going to be literally impossible for you to buy at 11,000. You will either buy at 11,010, 11,020. So even you will buy plus minus 10. Why? Because you basically think to yourself that my mentor is telling me to buy at 11,000. I surely don't want to miss the opportunity. You think to yourself in that way. And that's the greed, basically emotions coming in. I'll talk about the same concept regarding resistance. Let's say this is a 100 rupees level. That is my resistance. It is possible that the stock touches here and falls down. That is theoretically awesome. It is also possible that now you never touch this level but still fall down. Why does that happen? Due to my second emotion of fear. Think about it. I have told you 100 rupees is target. I made you buy a particular share at what price? Let's say 50 rupees. So you are my viewers. So I am your mentor. I tell you, buy this company at 50 rupees, sell at 100. I gave you my target and I said, do not hold it above 100 because that is resistance. What happens is when the stock comes to 95, do you think you will wait for 100? You will never wait for 100. Your emotional, psychological aspect, your fear will come into the market. It will say that, Devang said, please don't hold it above 100. So rather than holding till 100, let's try to make some less profit. Let's exit right now. Let's make 5 rupees less profit, but actually at least exit in a profit. So what happens is because of this fear emotion, because people think market can reverse from much before that area, people start selling. So the movement actually not happens from this area, but it happens from a little bit lower area because of fear. So what I'm telling you is the resistance is not that exact level. It is a zone. It is a zone. You have to do plus minus. So when I say plus minus, I will show some examples. You have to use your own experience. So for example, you have a share of 2000 rupees, at least do plus minus 10. You can't do plus minus 100. That's not a zone. You have to do plus minus 10. If a share is of 50 rupees, plus minus 30 paisa, 40 paisa. If for example, Nifty, plus minus 30 points, 40 points, all of that is fine. Do not exceptionally go higher, 100, 200 points. That is not correct. But when I say zone, you have to give some room to the market and accordingly trade. Let's look at the same example of TCS that we have just discussed. And then I think the exact what I'm telling you should be clear to you. So in this example of TCS, what did we tell you? We told you that this level of 2250 is a resistance. At the same time, I told you that 2050 is a support. Can you see that sometimes market exactly touched the support? Sometimes market bounced back a little bit above the support. This is the greed factor coming in. Also, you can see over here, sometimes the market exactly touches resistance. Sometimes it doesn't even touch and still falls down. Why? Because of the fear factor. So you have to make a zone in the market, not a level. So just to reiterate everything we have done so far. Support is a horizontal floor. Price will not be able to go below that. How do you set a support? Make sure that 2 times that level is tested. Extend that level, the level will hold true. Resistance is a horizontal ceiling. It's a supply zone. Price will not be able to go above that. 2 times that level is being tested. Extend that level. Whenever it comes there in the future, you have to go sell. Why does it work? Because of our human psychology, because markets assume history will repeat itself and we remember levels. As individuals, we want to do whatever we have done in the past, we want to do that again. And they are not levels, they are zones. So you will have to do plus minus, make a rectangle and give some room to the market. I hope this concept is clear. Just I will leave you all with one last example of Larsen and Toubro. This is actually with the I want to discuss this example when the COVID crash happened. A lot of people asked me, why did L&T stop at this exact price? Remember now, you know the concept of support and resistance. I can assure you that this level must have been a support 2-3 years back. Must have been a support. If you look, let's draw a horizontal line. Look back, go back, keep on going back. Why did L&T stop here? What was the reason of the COVID crash making your price stop here? This must have meant that people are finding the share cheap at this price, because look back, it must have been a support earlier. Hence proved 2016 this level exactly was support. Concept is clear. Any level which is a significant support resistance will continue on for a long time. Markets, remember, history repeats. So when L&T came here, people were ready to buy at this level. That's what I'm trying to tell you guys. If there is a significant resistance, if this level is a resistance, this will continue to be a resistance even later. See the example. If this level is a resistance in February 15, it will continue to be even in 2017, 2 years hence. Another example I can give is Larsen and Toubro Infotech, another IT company I love to trade. Let's look at the examples. This is the best example I can show you. 2018, the level of resistance was here. This level will continue even years later in 2020. So if you have a level in mind, hold on to that level, because that level is going to be there for a long time. So what I do is, personally, I make my levels and I forget about it. So when I have to look at my charts later on, I remember that this was one level earlier. So I know how to trade accordingly. At the same time, you can see a very good support coming in here. That is the reason whenever LTI came to this level, that was a support. So you were bouncing in this range for a very, very long time. Buy here, sell there, buy here, sell there. I hope the concept is clear. Revise this concept, guys. In the next video, we'll be doing an additional concept. If you have any doubts, message me or give me a call or sit for our weekend doubt clearing sessions. I hope you found this helpful. I will see you in the next video. Thank you so much.